So starting with the first topic on the different education loan terms would be collateral. So collateral is basically any physical or any financial instrument that you can put up to get an education loan or any kind of loan against it. These are also known as secured loans. Loans that require a security are called secured loans, or require a collateral are known as secured loans. Those who don't require collateral are called unsecured loans. Traditionally, banks require collaterals because education or any loan agreement are valid only in one country. Say if you're an Indian and you're going to study abroad in US, then any loan agreement that you sign in India is traditionally valid only in India. And since you're no longer in India, you're leaving somewhere else, then you need to be able to show something to the bank, some kind of security in the home country. A co-signer is also known as a co-borrower, and a co-borrower is someone whose credit profile lenders will look at to give a loan. So if someone were to give a loan without a collateral, then they would look at the co-signer's repayment history, their credit score. They would look at their income, their assets, and give loans against that. In general, no collateral loans tend to be slightly higher than collateral loans, especially when you talk about loans in India. But there are lots of international lenders, including Prodigy Finance, that gives loans without co-signer, and we're able to give loans without collateral or co-signer because we believe a master's education makes you more creditworthy. And talking about collateral loans, typically collateral loans will have a concept called margin money, which is basically the amount you need to pay as a proportion of the total amount. So, for example, your margin money is 10% and the loan is 50 lakhs. This means that out of the loan of 50 lakhs, the students need to pitch up with 5 lakh rupees, which kind of means that your loan is only for 45 lakhs. So that's a very, very important to keep in mind. What is margin money? Your actual loan size will be the remainder of the amount which is not considered as margin money. So please keep this term in mind. Please always ask this and plan accordingly. Just want to call out that Prodigy Finance does not have any margin money, but if you have any other lenders that you're looking at, there are lots of them. Please look at margin money and what does it mean for you. And someone had a question on repayments. When does the repayment process start? So Prasad, the repayment process starts after your grace period. And grace period is also known as moratorium period, which basically means that the amount you're not required to pay anything to your lender. Now, typically, a grace period is your study period and 6 months after graduation. The rationale behind this is that while you're studying and you do not have any income. So you're not required to pay anything during the study period, and lenders usually give 6 months of additional grace so that you find a job, get settled, and have like enough money to start repaying back. So the idea of grace period is to make things comfortable for you. And during this period, most of the lenders will calculate interest simple. Please check if it is simple for the lender you're looking or not. Usually it is calculated simple, but please check. The other thing I want to call out is that some lenders might ask you to pay interest every month. Some might ask you to repay interest, combined interest at the end of the grace period. The reality is that since this is simple interest, there is no compounding. That means that there is no reason for you to worry about repaying every month. It's the same thing. And that should help. Prodigy Finance does not have any requirements of payment during grace and study, and you can prepay whenever you want. The next thing I wanted to talk about is loan confirmation letter. Now, this is also known as a sanction letter. Basically, it's a confirmation that you have an education loan. This letter confirms that you have an approved loan from a lender and you will be able to secure funds to pay towards your tuition and living. You can use this as an official documentation for I-20 visa or any other official purposes. Lenders can also give you a provisional offer or a pre-sanction letter. Please bear in mind that those are not final letters, those are not confirmed letters, and do not use those letters, they are not accepted. Lenders often charge for this loan confirmation letter. It can be 10,000 rupees plus GST for banks, and it can be 1% of your loan amount for NBFCs in India. Prodigy Finance does not charge anything for the loan letter, and we offer it as a PDF, which you can use everywhere. So when I talk about variable interest rate, I really want everyone to understand that all interest rates are variable. So when you apply for a loan, and if you're given a loan right now at a certain percentage, it will change as you go along. Different lenders have different variable rates. Indian banks use MCLR, that is a marginal cost of lending rate. It is defined by the Reserve Bank of India. And also keep in mind that MCLR is the process of calculating MCLR is defined by the RBI. So it is super transparent and it is easy to understand how that is calculated. However, NBFCs use their own proprietary rates and they're free to change the rates as and when they want. Prodigy Finance uses a globally defined variable rate, which is called LIBOR. It stands for London Interbank Offer Rate. So that is a variable rate that is used by financial institutions across the globe, and trillions of dollars is lent over it. So every education loan has a fees to it, and it is very important for you that yes, interest rate is important. Interest rate is the rate on which interest is charged, of course, but then you should also keep an idea on what are the different fees. They can be single, they can be multiple fees, they can be informed upfront, or they can be hidden. So if we are talking about different education loans, like when it comes to upfront, you have the processing fees and GST, which depends on lender, but there can be other hidden charges which might not be told to you upfront, and it depends on lender to lender and the type of loan. So the number one is like lenders might often ask you for insurance. This is not compulsory. Some lenders have it compulsory. Some lenders do not require insurance. Prodigy Finance, for example, does not require insurance. Collateral valuation can be exhausting, can be challenging, can be a source of a lot of expenses. So think about it. And lastly, if you're going abroad to study for your MS, then you're probably going to pay your tuition fee in a different currency from your home country. So it could be if you're going from Ghana, it could be Nigerian currency, or it could be if you're going from India, it could be INR, and you would basically need to convert these currencies into, if you're going to US, into USD. And this conversion is expensive. It can vary from different portals. And remember, if you're planning to go for MS, then you can be charged and you can be looking to repay back your loan while you're in US for a 3-year OPT, and then you'll be repaying your loan back in USD and paying again for the conversion charges. So this slide is talking about loan tenure. So essentially understanding what is the total duration of the repayment. Now remember that your loan tenure starts after grace period. So if you have a grace period of your 2-year study plus 6 months of education, 6 months of grace period. So you're talking about if you're studying for 24 months and you have 6 months grace period, so your repayment starts 6 months after that, and that is your loan tenure. So it can vary from lenders. It can be 5, 7, 10, 15, or 20 years. And your EMI is estimated by the length of your loan tenure. It may change as you start prepaying. So we briefly touched on monthly payments, that is EMI. That is the amount you need to pay every month. This is during your whole loan tenure. And if you start repaying early, your subsequent EMI will reduce. So your EMIs are a function of your different loan tenures. So please keep in mind. So someone has a question: are there any prepayment charges with Prodigy Finance? Awesome. So there are different lenders have different policies. Check with your lender. It may vary for them. Prodigy Finance does not have any prepayment penalties. Super, super important. Secondly, and more importantly, is the fact that if you repay early, then your loan balance outstanding reduces, which means you will be charged less interest and subsequently you will save money. So if you prepay early, you can close out your loan super quick and you will save money. And lastly, I just wanted to, this is the last slide of this education loan terms, and this is called APR. It's called annual percentage rate, and it is not used in emerging markets. It is not a term in China, India, Brazil, or anywhere else. But it is very, very important if you ever come across APR to understand what it is. In essence, an APR is a financial tool to understand all of your hidden costs. So if you take a loan at 7%, and if you're told like you have A to X 20 times of costs, how do you understand the impact of the cost versus another loan which is 7.5% but does not have any fees? How do you compare two loan products if one has a lower interest rate but a lot of costs, a lot of hidden fees, and other has no hidden fees but has a slightly higher interest rate? And this is where an APR comes into being. It helps you understand the true cost of your loan. And remember that APR will always be greater than interest rate because it includes your fees and it also includes how interest is calculated. So if interest is calculated compound, then APR would be higher. If interest is calculated simple, interest will be lower. We believe at Prodigy Finance that APR is a fair way to compare loan products, and we always disclose APR. If you are looking to take a loan from an emerging market, they might not disclose their APR. All I'm asking for you right now is to not mistake your APR as your interest rate. So someone asked me, like, if you don't ask for a collateral, if you don't ask for a cosigner, then how in the world are you able to give education loans? Good question. And that's how we started in 2008. If you're going to a great university, if you're going to a university that has placement statistics that show that after graduating you will earn well. Say if you go to a top 10 engineering university in the US, and for computer science it says that you're likely to earn over $100,000 a year. That tells me that after graduating, your financial profile will be very, very strong. And if I know what you're expected to earn after graduating, then I can figure out how much is the EMI you can pay every month. If I know your EMI, I can back calculate the loan size we can give you. That is essentially the data science model behind this. If I can predict your salary after graduating, I can figure out the EMI you can pay back. And if I know your EMI, I know my loan size. How do we predict? We have data from different universities, different government organizations, etc. And with this data, we are able to give a feed into our system and build data science models that are able to predict your future with great accuracy. And look, we have been doing this for over 10 years. Okay, we have lent over $500 million and we have supported over 10,000 students. This number, keep in mind, because it will go high, it will go up significantly after September when we disperse the upcoming fall students. So we have been lending for a long time. We understand education loans and we have strong faith in our business model, and our investors believe in us, believe in you, and believe in the math behind it. And that is how we're able to lend without collateral, without cosigner, at competitive interest rates in a very student-friendly format. If you're interested in education loans from Prodigy Finance, please check out our website www.prodigyfinance.com and feel free to register your account. And we have a lot of our own events where you can reach out to us.